Hello dear Forex traders, welcome to IFC Markets. You are watching weekly market overview on IFC Markets YouTube channel. The previous week, the euro recovered from 2-month lows against the US dollar and as we can see at the chart outperformed the rest of the major currencies in terms of returns, surging by 1%. The common currency was followed then by its mostly correlated currency, the Swiss franc, that jumped by 0.9%. Next, the British pound and the Canadian dollar beat the US dollar by 0.7% and 0.4% respectively. Turning on the negative side of performance, the Aussie was mostly steady, however dropped by 0.1% against the greenback, while the US dollar against its major peers depreciated by 0.6%. Lastly, the Japanese yen declined by 1.1%. The US dollar index depreciated slightly the previous week due to profit taking by investors after a strong rallying to 81.45. In addition, the next head of Federal Reserve, Janet Yellen, signaled that would maintain current monetary policy of record low interest rates and $85 billion monthly purchases of assets in order to reduce further unemployment and enhance economic performance at US Senate hearing last Thursday. Moreover, the US dollar index, according to technical indicators, was overbought and all that together forced it to depreciate. Furthermore, the previous week was driven by speculation on central banks' policies based on the releases of macroeconomic data. For example, the previous Thursday, the lower Japanese third-quarter GDP release triggered speculation that the Bank of Japan would maintain highly accommodative policy for extended period, weakening the Japanese yen. At the same time, dovish comments by Janet underpinned risk appetite and further added selling pressure on the yen. The USD JPY ended on Friday at 100.22, up from 99.15 on Monday, despite that data concerning the US dollar have not been supportive. Data regarding widening trade deficit on Thursday, sluggish empire manufacturing and weaker industrial production on Friday. Moreover, the currency pair breached the potential symmetrical triangle to the upside, increasing rising chances. The British pound, which managed to outperform the greenback the previous week by 0.7%, was strongly supported last Wednesday by surprisingly lower claims for unemployment benefits. The pair jumped from the bottom of the daily 1.6256 to 1.5858 range towards 1.6111. Nonetheless, earlier in the week, the UK CPI data displayed that inflation dropped more than estimated, triggering speculation that Bank of England is more relaxed with the current accommodative policy and therefore could stay longer in place. Annual CPI dropped to its lower point since November 2009, and that is likely to increase selling pressure on the sterling, although improving employment data had the opposite impact. According to the latest report of the Commodity Futures Trading Commission, market participants reduced significantly their net long position on the euro currency. Net long speculative position declined by $6.5 billion to $5.6 billion, with the Euro-USD exchange rate falling from 1.3832 to a 2-month low at 1.3353 and bouncing up the previous week to 1.3500. Perhaps the pair could be on the way to form a reversal pattern. Our expectation is that the Euro-USD will be bearish the coming week. Looking ahead, the coming week could be proven interesting as many economic events are going to define traders' sentiment, with central banks' minutes and statements in the center of focus. On Monday, there is some mild interest of Eurozone current account data. Next on Tuesday, meeting minutes of Australia RBA, German 𝗧𝗍𝗍 survey for Euro and New Zealand producer price index are to be watched. Then on Wednesday, we are aware of Japan's trade data, Bank of England meeting minutes, US CPI and retail sales data, and the most important Federal Reserve would publish its last policy meeting minutes. On Thursday, Chinese HSBC manufacturing PMI, Japan's monetary policy statement, and then European PMIs, as well as US jobless claims and Philly Fed manufacturing index would define trading. Lastly, on Friday, we would be alerted for German GDP data, Canadian CPI, and Canadian retail sales. You are watching Weekly Market Overview by 𝗙𝗍 Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.